Hi everyone, I'm Mike Maruzars in New York and welcome to this edition of Money Matters. 'Tis the season to give money away. It's always the best gift to give because a person can buy whatever they want. But is it possible to give money and also reap some financial benefits? Here to answer that question is Moore's feature editor Jennifer Braunschweiger. She's going to tell us some tips and exactly how we can do this holiday giving that is tax smart. Jennifer, thanks for being here.
Thank you.
All right, happy holidays to you and our viewers who I'm sure are dying to know how they can give gifts that are tax smart.
Yes, it's absolutely possible to give money away and get something back in return.
Is it true that you can actually give gifts and reap some actual financial benefits for yourself?
Sure, you're looking at mostly at a tax deduction that you can take for giving money to a recognized charity.
All right, so are you finding that that people are more interested in those types of gifts that have the extra benefit when it comes to this time of year?
Yes, absolutely. You know, the economic events of the last couple of years have made everybody a lot more mindful of their money and where it's going. And we're really hearing from our readers that they are not going to leave any money behind on the table this year, which means taking full advantage of tax deductions that they're entitled to.
All right, well, let's look at some of your tips. And first up, you say give to charity. Tell us about this one.
Yes, this is an obvious one. You get a tax deduction for giving money to charity. It must be a recognized 501c3 charity, and you must itemize your taxes. The IRS requires a receipt for any donation above $250. Under $250, your canceled check or your credit card bill suffices, but we do recommend that people hold on to their receipts. Now, the part of your donation that you can take a tax deduction for is what you gave minus the value of anything that you received in return. So for instance, if you paid $1,000 to go to a dinner and the dinner is worth $100, you can take a deduction on $900.
Okay, and you also say you can establish a charitable annuity. Now explain to people what that means.
Yes, that's really the second way that you can get back by giving to charity. What that means is you give a large lump sum to a charity. You can take the tax donation in this year. You get back, as per your agreement with the charity, a certain amount, say 6% a year. So for instance, let's say you give $1 million to the charity, they can pay you back 6% a year until you die. This is useful for two reasons. One, as I said, you can take the tax deduction now. Second, in a bad economy, this is helpful because you can also donate assets that you are having trouble selling. So for instance, let's say you have real estate you'd like to unload, you have a valuable art collection, you can give that. The charity is responsible for selling it, and as per your agreement, you could say continue to live in the house until you die. You could hold on to the art collection until you die. So it's really a win-win for everybody.
Oh, it is. Let's go to your second tip, which is also great, and you say give to your children. Now, I'm sure parents out there have to have the answer to this one.
Well, money moves around in families all the time. The key here is really not so much about taking a tax deduction, but rather about avoiding triggering tax penalties in this year, and also managing your estate so that you reduce the eventual tax burden on your heirs.
All right, let's jump to our last tip, which is give to your alma mater. Why is this one so popular?
Well, I know I had a great time in college. You probably had a great time in college. And also, if your college is anything like mine, they make it very easy to give. They call you, they send you letters. So,
yes.
Of course, you can write the check and take the tax deduction. You can also establish a scholarship fund. Typically, it takes about between $125,000 and $500,000 to establish a scholarship, but you could endow a partial scholarship for $25,000. Now, many parents ask, if I'm writing a $25,000 check, is this going to help my kid get in? Am I going to get back in the form of an acceptance letter? The answer here is probably not. If your child does not have the scores and the grades to get into a school, there's really no amount of money you can donate that will pry open those doors. But all things being equal, between your child and another qualified candidate, a history of giving can make a difference.
Excellent, excellent advice this time of the year. Moore's feature editor, Jennifer Braunschweiger, thanks so much for joining us.
Thank you. It's a pleasure.
All right, in today's Tech Bites, Motorola is trying to get a buzz going about a new tablet